Okay, let's dive into Jubilant FoodWorks' Q3 FY25 earnings. The company released its earnings presentation and press release on February 12th, 2025, right? It seems like a pretty packed report.
Right, February 12th. They filed it with both the BSE and NSE. So Jubilant FoodWorks, as we know, is a major player in the food tech space in emerging markets. They've got a network of 3,260 stores across India, Turkey, Bangladesh, Sri Lanka, Azerbaijan, and Georgia. Their portfolio includes Domino's, Popeyes, Dunkin', Hong's Kitchen, and Kofi. And it looks like they've had some interesting financial results this quarter.
Okay, so can you give me a quick overview of their business model just to set the stage?
Sure. I mean, at its core, Jubilant FoodWorks operates primarily through franchise rights for global brands like Domino's, Popeyes, and Dunkin', alongside their own brands like Hong's Kitchen and Coffee. They focus on quick service restaurants and cafe formats, and their strength really lies in their well-established presence across multiple emerging markets. They've also made some strategic moves recently, like consolidating DP Eurasia, which impacts their overall numbers.
All right, so let's get into the financials. What are the key highlights from the income statement? Revenue, net income, all that jazz.
Well, consolidated revenue came in at rupees 2,150.8 crores, which is up 56.1% year on year. But keep in mind that includes DP Eurasia. Organically, excluding DP Eurasia, it's a 19.4% increase. So still pretty solid. Standalone revenue, which is mainly Domino's India, was rupees 1,611.1 crores, up 18.9% year on year. Their EBITDA, pre-Ind as 116, which is a lease accounting standard, was rupees 275.8 crores with a margin of 12.8%.
Got it. So strong revenue growth, especially for Domino's India. What about profitability? Any one-time events we should be aware of?
Yeah, the consolidated EBITDA margin was 18.7%, but that's down 163 basis points year on year. Standalone EBITDA margin was 19.4%, down 145 basis points. Actually, there was an impairment charge of rupees 4.497 crores on their investment in #Loyalty Private Limited due to discontinuance of operations. That's a one-time event affecting the numbers.
Okay, an impairment charge. That's good to know. Were there any dividend declarations in this report?
No mention of dividends in this particular earnings release. So nothing on record dates or payment dates for dividends this time around.
Understood. So turning to the balance sheet, what's the story there? Are they in good shape in terms of assets, liabilities, and equity?
Well, without the full balance sheet in front of me, it's hard to give a complete picture. But from what I can see, they're expanding their network, which means investments in assets. The key is to watch their debt levels and liquidity to ensure they can manage their growth.
Right, makes sense. What about cash flow? Are they generating enough to cover their operations and growth?
Again, without the full cash flow statement, it's tough to say definitively. But the fact that they're expanding and investing in new stores suggests they're generating positive cash flow. It's something to keep an eye on in future reports.
Okay, so any insights on segment performance? How are their different markets doing?
Domino's India is clearly a star performer with that 18.3% revenue growth. Delivery is a big driver there, up nearly 30%. In the international segment, DP Eurasia's system sales came in at rupees 754.4 crores. Domino's Sri Lanka and Bangladesh also showed strong revenue growth, up 65.4% and 38.6% respectively.
Got it. Domino's India and the international segment seem to be pulling their weight. Now, let's talk ratios. Any key financial ratios that stand out?
The LFL growth for Domino's India was 12.5%, driven by a delivery LFL growth of 24.7%. That's a pretty strong indicator of same-store sales performance. Also, their mature store ADS, or average daily sales, came in at rupees 85,959. These metrics show how well their existing stores are performing.
Right, those LFL numbers are definitely impressive. What about trends and comparisons? How does this quarter compare to previous ones?
Well, looking at the revenue trends, we can see consistent growth over the past few quarters with a significant jump in Q3 FY25. But remember, that's partly due to the DP Eurasia consolidation. The gross margin has fluctuated a bit, settling at 75.1% in this quarter. The EBITDA margin has seen some compression, as we noted earlier.
Okay, margin compression is something to watch. So, what's your overall outlook and recommendations based on this report?
I mean, Jubilant FoodWorks is showing solid growth, especially in Domino's India and their international markets. The key will be managing those margins and integrating DP Eurasia effectively. From an investment perspective, it might be wise to keep an eye on their debt levels and cash flow in the coming quarters.
I agree. Any potential catalysts or risks that investors should be aware of?
Definitely. Market conditions and competitive pressures are always factors in the QSR space. Regulatory changes could also impact their operations. And of course, any major shifts in consumer preferences could affect their sales.
Right. Before we wrap up, anything else we should highlight from the report?
Well, Jubilant FoodWorks granted stock options to eligible employees. Under ESOP 2011, they granted 49,490 stock options at an exercise price of rupees 661 per option. Under ESOP 2016, they granted 41,761 stock options at an exercise price of rupees 2 per option. The vesting schedules and exercise periods vary between the two schemes. This will be subject to fulfilling pre-vesting conditions.
That's good to know. Employee stock options can be a significant factor in long-term value creation.
Absolutely. It's all about aligning employee incentives with company performance. So yeah, Jubilant FoodWorks is navigating a dynamic market, but they seem to have a solid strategy in place.
All right, so what's your final verdict?
Jubilant FoodWorks is demonstrating strong growth and expansion, particularly with Domino's India and its international ventures. Investors should keep a close watch on margin management and debt levels. Growth looks promising, but it's important to stay informed and make prudent decisions.
Sounds like a reasonable assessment. Now, before we move on, I think this is a good spot to invite our listeners to like, share, and subscribe to our YouTube channel for more insightful analysis.
Absolutely. And remember, folks, always do your own research and, consider consulting a financial advisor before making any investment decisions.
Disclaimer: we advise investors to check with certified experts before taking any investment decisions. Always a good reminder.
Always. So, moving on to the next topic, let's talk about